The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone, and thank you for joining us for today's webinar, Electric and Autonomous Vehicles, a Transformative Shift for the Auto Industry. The presenters today are myself, Garrett Nelson, Senior Equity Analyst covering the global auto industry, and Angelo Zeno, Senior Equity Analyst who covers semiconductors and technology. Here's the agenda for the webinar today on slide 3. After a brief introduction, I'm going to provide our outlook for electric vehicles, followed by autonomous vehicles, and then hand it off to Angelo for our semiconductor automotive outlook. And then hopefully we'll have some time left over for questions at the end. You can submit a question by using the question feature in GoToWebinar. Our history as a firm spans over 90 years, and two important milestones on this timeline shown here are the most recent ones: CFRA's acquisition of S&P's equity and fund research business in 2016, and last year's acquisition of FirstBridge Data, which greatly expanded our ETF research product offerings. CFRA blends fundamental equity research with forensic accounting, and we also have a legal edge product. Our fundamental research covers all 11 sectors in 68 industries in total. We have qualitative research on over 1,500 companies globally and quantitative research on over 25,000 companies. Importantly, research is all we do, and that's an important differentiator for CFRA. We do not manage money or make trades. So without further ado, moving on to our global auto market outlook, I think it's important to first address the elephant in the room, which of course is the coronavirus, which is having a major impact on the global auto industry, in addition to many other industries, of course. It's really hard to sugarcoat this situation in our view, but we just updated our supply-demand forecasts for 2020 and 2021, and the bottom line is we think COVID-19 is going to have a devastating impact on global auto sales. The problem is global auto sales were already in decline before this event. That you can see how they peaked back in 2017. Auto sales fell by 4% last year. That was the steepest drop in a decade. And we think sales are unlikely to reach those levels again for some time. Amazingly, in the first 2 months of this year, China's auto sales were down 44%, and China's both the world's largest producer and consumer of automobiles. The February numbers were the worst monthly auto sales numbers in China in 15 years. We're also expecting a precipitous drop in sales volume in both Europe and the US, and so we now see a 17% drop in global auto sales in 2020. We consider that a base case. A bear case would, it would be even worse, and there's a chance that sales are not going to drop by that magnitude, but we think it's inevitable that there's going to be a pretty significant sales drop this year, and that forecast assumes that auto sales bottom in the second quarter before increasing in the third quarter and even more so in Q4. But I would describe the current situation as very fluid and untransparent at the moment, which is why you've seen companies such as Ford and GM withdraw their 2020 guidance. And in fact, if you look at the Detroit Three, GM, Ford, and Fiat Chrysler, all of their US plants are currently idled at the moment, and the same goes for Tesla. But for purposes of this webinar, we view the shift towards vehicle electrification and autonomy as a long-term secular trend, which will continue regardless of any near-term impacts on the auto market. So slide 9 shows our new sales volume forecasts, and one thing I would highlight is that China, Europe, and the US together account for over 70% of global auto sales. And we're now forecasting that China's sales decline by 18.5% this year, and for Europe to be down almost 7%, and for the US to be down over 15% for about a 17% drop in global auto sales. And for now, we're forecasting a 6% rebound in 2021. But again, the outlook here is highly opaque. So moving on to our electric vehicle overview, here's a brief history of electric vehicles, which in fact are just as old as gas-powered vehicles. If you go back to the year 1900, EVs accounted for about 1/3 of all vehicles on the road in the US. But then you had the rise of Ford with their popular mass market automobiles and low-cost manufacturing innovations, and the discovery of huge oil reserves soon after that in Texas and elsewhere, which soon made electric vehicles nearly obsolete, as we see here on slide 11. So on slide 12, if we fast forward to the 1990s, some new government regulations were put in place and some incentives which began to renew interest in electric vehicles. And then you had oil prices which soared in the 2000s and gave the EV movement further momentum. Then you had the Tesla being founded in 2003 and the introduction of their first electric vehicle in 2008. And then a steep drop in battery costs happened last decade. This shows a 50% drop, but some estimates show lithium-ion batteries actually declined by more than that, and that really lowered the production costs of electric vehicles and a lot close parity with gas-powered vehicles. They're not quite there yet, but they're a lot closer to parity than they were a decade ago. Okay, moving on. Last year, global electric vehicle sales totaled about 2.3 million vehicles, which was a 9% increase from 2018. And that was, again, that the 5% increase is much better than the 4% drop in total global auto sales, but that was still the weakest growth rate for EVs in the past decade. And electric vehicles accounted for 2.5% of all auto sales worldwide last year. Moving on, Consumer Reports published a survey last year that I think really illustrates that there is significant interest in EVs among US consumers. And it's not just a small segment of the population that has an interest in switching from gas powered to electric vehicles. 36% of prospective car buyers said they would either consider buying or would definitely buy an EV within the next 2 years, which is a pretty impressive percentage. The other key takeaway here is that an EV's purchase price and driving range are by far the two most important factors that potential buyers care about. So here at CFRA, we talk a lot about the price versus range proposition when we discuss electric vehicles, and that's really where Tesla has excelled. But range anxiety is still a very, very real thing among consumers. So that's really what they're looking at, the purchase price, but followed closely by the range. Moving on to slide 15, I think it's important to look at what the industry has said about EVs in the past and what they've said more recently. And what really happened last decade was a shift in the attitudes of traditional automakers from one of dismissiveness towards electric vehicles towards one of growing acceptance. And here you see back in 2014, the chairman and CEO of Fiat Chrysler said about their EV, the Fiat 500e, I hope you don't buy it because every time I sell one, it costs me $14,000, essentially saying these were not money-making vehicles, and basically they're only producing these cars because government regulations were mandating it. And then later in 2018, he said, I don't know of a company that's making money selling electric vehicles. unless you are selling them at the very, very high end of the spectrum. And then at the bottom, by 2018, you had Bill Ford of Ford Motor Company kind of conceding that electrification is here to stay. Importantly, there's a $7,500 federal electric vehicle tax credit that's still available on EV purchases in the U.S., which is really giving some automakers a significant competitive advantage from a sales perspective because of the way the tax credit works. So basically, when an automaker hits 200,000 cumulative electric vehicles sold in the U.S., the tax credit begins to phase out over a 12-month period before going away completely. And to date, the only two automakers who have hit that threshold are Tesla and General Motors, whose credit is set to expire next week. This slide lists a dozen electric vehicle startups that have failed over the past couple of decades. And the key point we would make is that the global auto industry is a highly competitive, cyclical, high fixed cost, and low margin industry. And the failure rate for startups is very high. In fact, if you look, the average operating margin for the U.S. auto manufacturers last year was only about 4%. And that's a big reason why this industry's multiples are some of the lowest of any industry. If you look over the last decade, the average PE multiple for the major U.S. automakers was only about 6 times. And on slide 18, this is the list of discontinued EV models over the last couple of decades. Most of these vehicles did not sell well at all. And there are a number of both battery electric vehicles and plug-in hybrids on this list. I think the key takeaway is that the EVs that have really enjoyed commercial success have very much been the exception, not the rule. And really, Tesla is the only company that has had a sustained level of success in electric vehicles. This next slide shows the list of best-selling EV models in the US last year. And if you take the 3 models produced by Tesla, the Model 3, Model X, and Model S, they together accounted for about 58% of all EV sales in the US. So you can see that Tesla has really been the dominant player in the EV market, but they're going to be facing a lot more competition here very soon. So this year, there's a flood of new EV models scheduled to debut in the US, 20 new models in total. And one thing I would point out is that 8 of the 20 new EVs listed here are about 40% are plug-in hybrids with a range of 40 miles or less before they switch over to gas-powered. So automakers have made a really big bet that there's going to be demand for these sort of low-range, commuter-type, urban-oriented electric vehicles. And the reality is, most of these models are probably going to flop from a sales perspective, we think. But there are a couple notable exceptions: the Tesla Model Y and the Ford Mustang Mach-E, both of which have a very compelling mix of price and range, and fill somewhat of a void in the very popular SUV and crossover category in the electric vehicle market. Moving on to slide 21, there are a lot of projections out there regarding the future growth of the EV market in the US, and we decided to include this one from EEI because it seemed to be the most realistic from our perspective, and it shows the EV market share growing from about 2.5% to 14% over the next decade. Aside from Tesla, the European automakers are well ahead of the US automakers in terms of EV development, And longer term, we do think companies such as Volvo, Volkswagen, BMW, and Daimler, maker of Mercedes-Benz, will have the greatest amount of electric vehicle exposure in their portfolios. So to sum up some of our concluding thoughts on electric vehicles, we think EV sales will surge in the coming years as prices drop closer to parity with gas-powered vehicles. We predict that most new EV models will flop from a sales perspective, and price and range will be the two most important factors in determining success. There's also the tax credit, which gives some automakers a disadvantage, an advantage over others. But we think a diversified approach to EVs makes the most sense, and don't expect electric vehicles to be a major profit driver for most auto manufacturers. And last but not least, we think future oil prices and global GDP growth are the two biggest factors that will affect future EV development. Obviously, what we've seen over the last few weeks are pretty seismic changes in both of those areas. Okay, so now moving on to autonomous vehicles. So when we talk about autonomous vehicles, there are 5 different levels of autonomy as defined by the Society of Automotive Engineers, as shown here on slide 24, where 0 is a vehicle with no autonomous functions at all, and level 5 is complete autonomy, where a passenger can essentially get in the vehicle and fall asleep until waking up at their destination. And most experts agree that current technology is somewhere between level 2 and level 3. And we'll talk more about that in a moment, but let's first look at some of the arguments both for and against autonomous vehicles. So here on this next slide is the case for autonomous vehicles, and safety is an obvious number one. The fact is nearly 40,000 people die every year in motor vehicle accidents in the US, and many more are seriously injured. And the data shows that 94% of serious accidents are caused by human error. And there are also clear economic and societal benefits as shown here. And also the fact that drivers could be working or doing something more productive with their time instead of just being behind the wheel. There's efficiency and convenience benefits, and also mobility. When you look at the population, the number of elderly individuals and those with disabilities. So those are the arguments in favor of AVs. Now moving on to the case against autonomous vehicles. Statistically speaking, automobiles have never been safer than they are today because of safety features like anti-lock brakes and airbags. The numbers show that the fatality rate in the US is just over 1 per 100 million miles driven currently, and that's down from a high of about 24 a century ago. But still, the vast majority of fatalities are preventable. So moving on, here's the case against autonomous vehicles, and there are some very valid points on here as well. I think you know, safety is also the number one reason against AVs, ironically, because statistically speaking, humans are extremely good drivers, and vehicles are safer than ever. And the reality, I think, is that AVs won't be broadly accepted by the public until they're at least as safe as human drivers. And then there are also economic and societal costs. AV development is extremely expensive. So there's the question of opportunity cost. You know, with the hundreds of billions of dollars that the industry is spending on on AV development be better spent elsewhere, perhaps on debt pay down for the industry. But there's hundreds of billions of dollars that are going into autonomous programs. So I think that's a valid question. And then finally, there are also cybersecurity concerns, because as cars become a lot more connected, that really increases the risk of hacking. On slide 28, this is a picture that I took of a concept car that was on display at an auto show that I attended last year. And I think it really provides a glimpse of where things are heading in the future, which is why I wanted to include it. You can see there are no manual controls or buttons anywhere on this vehicle. Everything was operated through a single computer screen on the dashboard, and the steering wheel would actually contract and disappear into the dashboard. So it was full. The idea was this is a concept car, with full level 5 automation. So if we're somewhere between level 2 and level 3 today, the big question is how long will it take to get to level 5? And here's one forecast of global sales of level 5 AVs. This is from LMC Automotive. But in my view, this is probably a bit optimistic, because there's just not realistically going to be 1 million level 5 AVs sold 5 years from now, just considering where things stand today. And the most likely scenario is that these estimates probably all get pushed further to the right on this chart. So like we did with electric vehicles, let's look at what the experts were saying prior to 2019, and also what they've been saying more recently. And I think what this shows is that expectations have really been ratcheted down. They've really been dampened as far as the timing of getting to level 5 fully autonomous vehicles. So this slide shows some of the things that were said prior to 2019. You had Elon Musk saying back in 2014, self-driving technology is almost at a point when owners will be able to fall asleep in their cars and wake up at their destination. I think that's about 2 years away. And then in 2017, the CEO of Waymo said, fully self-driving cars are here. It's not happening in 2020, it's happening today. Interestingly, just over a year later, he said, autonomy will always have some constraints. So he's already backing off that what he said the prior year. And then you had the chairman and CEO of GM in early 2018 who said, we've taken the steering wheel and pedals from the AV because we believe we'll be able to deploy this in 2019 safely. Of course, none of these predictions came to fruition. So moving on to the next slide, starting about a year ago, there was a huge shift in expectations, and the reality really set in that it's probably going to take a lot longer to get to level 5. So these are all quotes on the next two slides from 2019. You had the CEO of a company called May Mobility, autonomous technology company, who said, robo-taxis are likely to be a fantasy until 2035. The CEO of Ford saying we overestimated the arrival of autonomous vehicles. But then you had Elon Musk, who is really an exception, and last April he said, next year for sure we'll have over 1 million robo-taxis on the road, and we'll get into in a minute why he's been so confident in his tone on this matter. And then at the bottom, Nissan said it's probably going to be at least until the late 2020s at the earliest before they're even able to reach level 3. On slide 32 here, you have Waymo more recently conceding, this is probably the greatest technological challenge of our generation. And then another quote from a AV company called Zoox, an executive said, Tesla vehicles are not going to be able to drive themselves in 2020. The vehicles don't have enough sensors or computers to do that, given any remotely known technology that exists or that humans have ever created. He would need to come up with 4 or 5 orders of magnitude more performance out of systems. Somehow he would need to make 50 years more progress. It's not happening. And then finally, Apple's co-founder Steve Wozniak said last fall, I've stepped way back on this idea of level 5. I've really given up. I don't even know that it will happen in my lifetime. And then on these last few slides, I don't want to spend too much time on them because Angelo is the expert on the technology side of autonomy. But here are some of the considerable obstacles that stand in the way of achieving full autonomy. There are technological, legal, and regulatory, and public perception barriers that will be needed to overcome and achieve full level 5 autonomy. There are also vastly different views on the technology and the correct approach to achieve full autonomy. And right now, it's really unclear if any one approach will be successful, or perhaps more than one approach will be successful. It's just not clear right now. Recently, a lot of debate has revolved around the use of LiDAR, which most of the traditional automakers have embraced, but Tesla has not. Here you see where Elon Musk calls LiDAR a fool's errand, and he says anyone relying on LiDAR is doomed. They're expensive sensors that are unnecessary. But I think more recently, what we've seen is there's been a growing acknowledgement across the industry that maybe LiDAR is not necessary, in fact, for full autonomy, as you can see in some of those other quotes. So moving on, slide 35. I think the important thing is that most automakers have made a huge bet on LiDAR. Whereas Tesla is really taking the road less traveled from a technology standpoint. And Tesla's technology uses 2 stereo cameras mounted to either side of the rear view mirror, along with some other technology and the frequent over-the-air software updates in lieu of LiDAR. And so our concluding thoughts on AVs here. First, level 5 AVs are likely much farther in the future than most experts thought just a few years ago. Secondly, we think global GDP growth is the single biggest factor that will affect future AV development. And AV-related costs will continue to weigh on consolidated earnings for major automakers. That statistic at the bottom, amazingly, Ford's 2019 operating income would have been about $1.9 billion last year instead of the $574 million that they reported if you were to take out their AV segment, which is called Ford Mobility. And GM's operating income would have been about $1 billion higher if you strip out their GM Cruise segment. So they would have done 10.1 billion in EBIT instead of 9.1 billion. So in summary, these are the winners and losers in EVs and AV technology as we see it. The winners, number one, Tesla. They have a first mover advantage with an attractive combination of both price and range with all of their vehicles. Also, they've been doing their AV development in-house, which is a strategic advantage, as a lot of the other traditional automakers have been relying on third-party auto suppliers for their AV technology. Also, the European automakers, EVs are very popular in a lot of European countries, countries in Scandinavia, Norway, for example. EVs account for almost half of their electric vehicle sales these days. And companies, the companies based over there, particularly Volvo, Volkswagen, BMW, and Daimler, are really ahead of the curve and ahead of a lot of the American and Japanese automakers and Chinese as well in terms of their development of both electric and autonomous. Winners, anyone still eligible for the full $7,500 federal tax credit in the U.S. So everyone except for Tesla and GM, and then also the EVs in the very popular SUV and crossover category. There's really been a void of available product in that very popular category, which accounts for almost 70% of new vehicle sales in the U.S. now. And the losers, the big losers are, from our perspective, the big three U.S. automakers. They've really been playing catch up with their product pipeline, catch up with Tesla, and catch up with a lot of the European automakers. They've also made a huge bet on LiDAR technology, which may not pan out as they expected. And also, as we mentioned on the last slide, AV segments have become a significant drag on overall earnings for companies such as Ford and General Motors. So with that, I'm going to hand it over to Angelo for our semiconductor auto outlook. Thanks very much.
Great, thanks a lot, Garrett, and hello to everybody on the call. So I'll spend the next few minutes, speaking about autos from a technology perspective, more specifically a semiconductor perspective. Now, when we think about our high-level view at CFRA here, it's essentially the automobile will be that next kind of big tech device disruptive industry for the semiconductor industry. Essentially, we see three mega trends taking place supporting our views, and you shouldn't be surprised by the first two here, given that they're topics that Garrett just highlighted, which is the shift to autonomous vehicles, as well as the electrification of the car. The third also shouldn't be a surprise and really reflects the ongoing evolution towards a more connected vehicle, essentially giving a car many of the similar features that you see on a smartphone today. Now, I'll highlight some of the stuff in the next couple of slides and our themes supporting our view for kind of the new growth opportunities for this industry. We continue to believe auto-related semiconductor stocks will outperform the broader semi space by about 2 times in terms of growth over the next kind of 3 to 5 years, and probably even longer than that. But that is, and that assumes a no-growth environment for vehicle sales. But I also would caution 2020 is definitely an outlier given the coronavirus, and really adds significant near-term uncertainty to the end demand landscape for automobiles. And Garrett really alluded to that earlier. I lay out some of the key areas of focus here: infotainment systems, safety, battery management systems, autonomy. But and I'll discuss some of those opportunities for the chip makers. And while Garrett alluded to fully autonomous vehicles being years away, that being level 5, many companies do have a roadmap of getting to level 4 within the next couple of years here, and those initiatives will help fuel semiconductor growth. And just kind of before I go through these next couple of slides, just be mindful that when I talk about the outlook for semiconductors, it pertains only to the actual silicon and semiconductors. So, for instance, a company like NVIDIA, they're looking to sell its own hardware and software offerings to automakers that can cost in excess of $10,000. That would be in addition to the figures I plan to highlight. But I also plan to kind of get into what NVIDIA is doing, as well as Tesla and Waymo. So kind of going to slide 40 here, this is just a representation of the exposure of autos to the semiconductor industry. We expect autos to be the highest growth opportunity among all these categories in the coming years. Again, ex 2020, we think could easily make up 20% or more of the industry 10 years from now. 12% today. about 3 years ago was only about 8% of the industry. So before I kind of go into details on our look for the semi-auto industry, I think it's important to just kind of highlight some of our thoughts on the coronavirus and the implications it's having on a broader chip industry level. I've been telling investors overall the implications on tech really stem from both the demand and supply side of things. From the supply side of things, our concerns really have really dropped from about an 8 out of 10 in late January, early February to now about a 1 or 2. In fact, we expect any supply chain issues to essentially be resolved here within the next couple of weeks. And for all intents purposes, we're actually through that disaster. And a big reason for that is because the demand side of things is clearly the bigger issue for the chip industry. We're seeing some very muted demand, especially kind of on more the consumer side of things, which shouldn't be a surprise to think about the smartphones of the world and even the automobiles of the world. And where you actually expect to see the most stability is more the enterprise-oriented things. So think about data centers being a lot more resilient in nature. 5G also, we think, because of some easy comparisons from last year, should hold up very well. But nonetheless, we are going to see some push-outs, especially if kind of the environment continues to deteriorate. Now, on slide 42 here, we just provide our bull base bear probabilities for auto semi growth. Really, the chart on the left shows our base assumptions, which gives about a 60% probability of happening. Essentially, in this scenario, we assume semiconductor content in the car will grow about 7 to 9% annually, and that's after 2020, where we forecast no growth for vehicle unit sales. And this gets you to kind of a high single-digit percentage growth over the next 3 years. On a bull case scenario, we give that about 25% probability, assumes same content growth, while vehicle units grow about 2 to 3% annually. That gets you about 10% plus growth for the auto semi industry. And then finally, the bear case, about 15% probability, assumes no growth for auto semis as vehicle sales kind of decline and investment in level 4 vehicles are pushed out due to macro issues. And that's essentially the type of scenario we saw in 2019, and again, what we're seeing in 2020. In that situation, we would expect sales to decline, about 10%. All right, so going to the next slide here, this is just a quick chart of the difference between the luxury and standard vehicle market in terms of the semiconductor content that you see. So the average car sold last year had about $400 worth of semiconductor content, but you can see a big difference here between the content in a luxury car versus a standard vehicle. Not surprisingly, these vehicles are the ones with the EV plugins and some semi-autonomous capabilities already embedded in the car, and that mix will grow, kind of pushing up the average content in the vehicle. Now, slide 44 here. In the next few slides, I just kind of want to get into a high-level discussion on where the semiconductor opportunities will come from. At the end of the day, we think it's best to break down the car into 5 categories for the semiconductor industry. So the first is connectivity. So today, about 40% of cars have some sort of cellular connectivity. That figure is expected to rise to 70% in 5 years. Most cars being sold today already have some sort of Bluetooth and Wi-Fi capability, as many of you are probably aware of. Second is autonomy, which is where I'll spend most of my time. You can see some of the sensors believed to be needed for autonomous cars here, right? Radar, cameras, LiDAR, the eyes of the car, and then you also need the processors or the brains of the car, right? Which is where a company like NVIDIA and Intel hope to control. Third category is defined as powertrain and vehicle dynamics. This is where the EV side of things come into play. So some of the sensors are included here and include the powertrain controllers, which essentially act as the brain of the engine control system. However, we think the real big opportunity here in this category really is around battery management systems, which will gain steam as EV adoption grows. Fourth category, body and comfort, just the idea of more stuff around your car becoming automated. Your doors, your mirrors, your sunroofs, includes sensors that control your temperature and lights, among other things. And then your final category, connected infotainment systems, essentially the dashboard on your car. The market here is really matured, with most cars being sold today having some sort of touch display in the US. But I'll talk about some of those opportunities and where they exist as well. Next slide here. This is just a table about the opportunity that EVs bring to the semiconductor industry. So we believe a battery electric vehicle adds about $450 of semiconductor content relative to your traditional internal combustion engines. So you can see from the table at the bottom how that opportunity incrementally grows as we move away from these ICEs towards these hybrids in nature. So the real opportunity comes when that main charging mechanism is in the form of plugins. So the last three examples on the table that you see is they require more powerful batteries with greater electric traction. So Garrett talked about the opportunities in EVs. And EVs, let's say if they grow from 2% of the market to about 10% here over the next couple of years, you can see how the mix alone will help the chip makers. In battery management solutions, not surprising, they will be an area of significant growth. And we see silicon growth on these solutions rising at about an annual pace of 25 to 30%. So on the autonomous side of things here on slide 46, Gary talked about the 6 different levels. This slide essentially looks at those 6 levels, but on the right column, you can kind of see the additional semiconductor content increase as we need to add more sensors and capabilities around and inside the car. Clearly, the jump here is as we move to level 3, 4, and 5. At level 3, you start getting significant autonomy, where the driver can disengage over time, where Tesla is at the moment. So level 3, we're talking about $600 in semiconductor content, goes up from $150 at level 2. As you progress towards level 5, that essentially doubles from level 3 levels. Now, as we kind of dig deeper in the autonomy side, much of the sensors around the car can be defined into 3 categories, right? So we list them as radar, LiDAR, and cameras. I think the table in the bottom right really does a good job showing the number of sensors needed for each as we progress from level 1 and 2 to 3 and then 4 and 5. These 3 sensors are essentially expected to act as the eyes for the self-driving vehicle. For those not familiar with the terms, radar essentially works through the use of radio signals. They bounce off surfaces around the car. LiDAR uses these laser light sources that scan the surrounding area around the car. And then finally, you have these cameras, which are great at providing closer and wide-angle views of what's around the car. Garrett discussed how Elon Musk has essentially said LiDAR is not necessary, basically saying radar and cameras are enough to do the trick. And we'll kind of see if that is necessarily the case in the coming years. But the last sensor I do want to highlight is V2X. That's vehicle to everything. Essentially provides the ability for the car to communicate with everything around it and other things to communicate with the vehicle. So think about a car warning another car 5 miles away of an accident that just happened, which would reroute the path of that other vehicle. And that's an area where Qualcomm is really kind of strong in. Now on slide 48 here, this just gives you an idea of some of the different functions of each of these sensors, right? Radar and cameras really doing a lot of the bulk here. So for instance, radar will help manage the speed of the car with something called adaptive cruise control. Also used for capabilities like collision avoidance and obstacle avoidance. The drawback on radar is you can't see details, really not able to detect the identity of objects clearly. Now, on the LiDAR side of things, the strength on that end is the ability to better predict an object behavior. So, for instance, LiDAR can detect if a person is facing forward or backward in the street, whereby radar can't do that. In that event, LiDAR can better assume what the pedestrian or the object around the car will do before it even happens. Great thing about the drawback about LiDAR, though, is it's very expensive and it really doesn't work well in bad weather. Now, finally, you have cameras. Provides the highest resolution, which is what's great about it among the 3 sensors, and great for helping to read roadsides, traffic lights, and anything else around it. But we think when it's all said and done, as you move towards level 5, you're going to need a combination of all these sensors to really have, what's truly called an autonomous vehicle. Now, next slide here, I kind of highlighted a vehicle to everything. It's gaining some traction among some of the auto manufacturers out there. Essentially, the idea of passing along information to any entity or object that may affect the vehicle and vice versa. The 2 main components is V2V, vehicle to vehicle, and then vehicle to infrastructure. So, think about smart cities, among other things. And again, Qualcomm really the key player here. And we think as 5G adoption helps, you're going to see an increasing amount of this technology out there. Next slide here. We kind of talked about the eyes of the car, but if you're creating an autonomous car, was as simple as slapping a couple of sensors around the car, then we'd already be there, right? In fact, the most important part of an autonomous car is a computing platform. And at the end of the day, the idea of autonomous cars should be thought of as a data center on wheels, or at least that's how we define it. So think about, it's computing at the edge, essentially, where it's the actual vehicle making this decision, without having to reach out to the data center for input. Now when we think about autonomous vehicles, it's all about kind of training your car, giving it the AI capabilities that's done with that computing platform or brain of the vehicle. Not surprisingly, this can be done via 4 different options, which I highlight in the table, and all are very common and found in the data center today. The first is the GPU. It's a graphics processing unit, probably being dubbed as the best option out there, and NVIDIA is the dominant player. And who would have thought, the gaming space is where we would have found the answer to AI in the car, but it's indeed the fact with these graphics chips. They've gained a lot of attention in the data center over the last 5 to 7 years as cloud giants like Amazon and Alphabet and Microsoft are adopting it in their ecosystem for machine learning capabilities. And we think GPUs will eventually be the industry standard here in the car. ASIC's another option. That's the path Tesla has taken. They've recently dumped NVIDIA as their processor out there. But the positives here is that it's cheaper in full production, but extremely difficult to create and has very high upfront costs. Then you have FPGAs. These are field programmable gate arrays. Unlikely to be the answer. Less powerful, very costly. Great for prototyping, but not real life. And then finally, you have what's called the CPU, the central processing unit. Unlikely also to be the answer on a standalone basis at level 4 and 5. Intel utilizing it at the moment with Mobileye, but we think they're going to roll over to a GPU here in the coming years, and will help support auto initiatives. And next slide here, just really quick. This sums up the 3-step function of how autonomous cars work once in the real world. Just provides high-level view of how these sensors and computing capabilities come together to work in a real-life situation. So the 3-step process is essentially map building, then path building, and then perception obstacle avoidance. Now, next slide here, comparison of leading providers of autonomous capabilities. When I think about, or speak to investors, these are really the 3 names I often get asked about the most so I figured I would throw them on a slide together. Makes sense too, given that these companies are currently viewed as having first mover advantages, but in different ways. So this just looks at the 3 from a technology perspective, but Tesla clearly leading the way in terms of the self-driving car, in terms of being able to generate real-world data. Waymo is a little bit different. They relied more so on simulators out there, but Tesla, a big believer in cameras and radar, not LiDAR. Waymo, on the other hand, trying to leverage that LiDAR technology, and a big believer on that side of things. The difference on the Tesla side of things relative to everybody else, the brain, again, has that internally developed processor. It's an ASIC chip. That'll allow them to actually make this technology a lot cheaper than everybody else out there in real life production. And it's partly why they're able to kind of charge the prices that they are for the Model 3. And then just one other name I'll throw out there, NVIDIA. They are kind of the GPU hardware software supplier. I think they're going to be a huge winner here over the long term. We expect them to really help lower the barriers of entry for the automotive industry here over time. Now, on the next slide here, just really quick, that was a lot of stuff on autonomous vehicles. One more topic I did want to highlight really quick is infotainment systems, right? It's a maturing market, but still a very good market. It's growing about 5% a year, so below our overall forecast for auto semiconductor growth. But we think, will be driven by greater penetration, primarily in China, and really the idea of making the infotainment system into more of the entertainment device. So, think about seeing more, increasing displays being sold in the front and back seat of cars. Now, next slide here, just looking at the top 20 chip makers on the planet last year and their exposure by segment. The auto exposure is the red bar, and the most exposed are actually overseas-based companies. Companies like NXP Semiconductors, Infineon, and ST Micro, along with the Japanese-based Renesas. In the U.S., you've got companies like Analog Devices, On Semiconductor, and Texas Instruments being the most exposed for those that are interested in some of these names out there. We continue to believe, again, long-term auto growth will outgrow these combined industries when we exclude the coronavirus implications today. And next slide here, just an overview of our U.S. coverage and some of the chip names most exposed to the auto space. I try to break down where these companies have the greatest exposure of their offerings by category. By no means is it expected to be exclusive, but I do believe that just having exposure to the area is not good enough, right? If you look at where the greatest percentage of content growth will come from, it's actually those first three categories. So naturally, that's where you want to be leveraged if you are a supplier in the industry. So, kind of going to the next slide here, when we look at our opinions and valuations for these auto chip makers, you can kind of see how much, especially when we're looking on a 2020 basis, how much of a discount they're trading at. And just a couple of weeks ago, I'll tell you that most of these names were trading at decent premiums to their historical basis. But when we kind of think about our favorite names in the space, it includes NXP Semiconductors. We do think they are going to be the content winner here. About half their revenue is tied to the auto industry. They're going to be extremely challenged here in 2020, but we do think they're going to be a winner. Another name we do like a lot, On Semiconductor. This company is a bit leveraged, so they are being hit because of the liquidity issues that are going out in the market today. But we do think they'll be just fine, and they'll be able to roll over some debt that's due at the end of this year. And we do think there'll be a nice opportunity here for investors. But there are a ton of names out there that you can play. These are a list of some of the most exposed in our space. And I'll just leave it at that at the moment. At this point, I guess I'll just throw it back to Garrett, and we'll open it up to any questions.
Okay, thanks, Angelo. Just give me 1 second here while I compile the list of questions. Okay, we had a question here related to the coronavirus. It's in light of the impact of the coronavirus, what is your forecast for global electric vehicle sales in 2020 if you're expecting total auto sales to drop by 17%? That's a good question. So we're forecasting right now a 5% decline in global EV sales, and we think that's really going to be driven by China. We expect EV sales to hold up a lot better in both Europe and the US. If you look, the first couple months, European EV sales have been very strong. I know in January, their electric vehicle sales were up 121% year over year. So, and then in the US, you have all those new EV models coming. The Tesla Model Y, first delivery of that vehicle was actually last week. And then you have the Ford Mustang Mach-E later this year, which they've had a very strong level of reservations for that vehicle. So, we think the US and Europe are going to hold up a lot better, but we do see global EV sales declining 5%, meaning that they will continue to pick up market share of the overall global auto market. And Angela, do you have anything to add on that? Angela, I think you might be on mute. If you could unmute, please.
Yeah, sorry about that. So, when we kind of look at the, the semiconductor side of things, I mean, our base case entering the year, we were looking for about 5% growth for the semiconductor industry. We're now looking for about a 5 to 8% decline in the industry, and that has significantly changed, as you can tell, over the last 2 months. So our view here is again, the automotive side of things probably going to actually be weaker than the industry overall in 2020. But that being said, we do think you're actually going to see some very nice opportunities create itself here over the next kind of several months.
Okay, great. So we have another question. This is for you, Angelo. What chip makers do you believe are best positioned, i.e. will take the greatest share ahead of a major inflection in the shift to EVs/AVs?
Yeah, I mean, I guess that it all depends, and I think it's a great question. But our view here, over the next 3 years, the ones that are probably going to be the biggest share takers or best positioned are going to be the most exposed primarily to the EV side of things, because that's really, I think, where you'll see greater adoption or adoption take place quicker relative to the autonomy side of things. When we think of that, primarily we do like battery management systems more so than any other area of EVs. So NXP, Semiconductors, and On Semiconductor, 2 names I did highlight previously and names we like a lot. Another name to keep an eye on that we do have a hold recommendation on, longer term wise, the company called Ambarella. They do a lot of the computer vision stuff, or plan to do a lot of the computer vision stuff. It's a smaller player out there, could potentially be a takeover target at that point in time because of the technology they're working on. But I think that's a very interesting play to look at. And then NVIDIA also, I think, is going to be an absolutely great opportunity. I think they've got a very long tail. So if you're an investor, you've got to be a little bit patient on the autonomous side of things. But they're going to be a huge winner. But that's going to be more 3 to 5 to 7 years out. But clearly, if you're a long-term investor, that's a great way to kind of look at things.
Okay, so here's one more question. Looks like this is for me. With the reality having set in that level 5 fully autonomous vehicles are still years away, how long do you think automakers will continue to invest heavily in AV programs? Good question. So we do think you're going to see some cuts in AV programs. Really, the major automakers are going to do everything they can to preserve liquidity and stay afloat. You're already seeing some very draconian cost cuts, both OpEx and CapEx. We think you're going to see a lot more layoff announcements, unfortunately, and also dividends being cut or suspended altogether, as Ford did just a few days ago. So in recent days, you've seen both Ford and GM completely withdraw their full year guidance and draw down their credit facilities. Ford, in Ford's case, drew down their entire credit facility. But you're going to see some pretty steep cuts, we think, in AV spending, which is kind of low-hanging fruit from a cost standpoint. But what they're really afraid of longer term is that they're going to be made obsolete if they don't keep up with the pace of other automakers and the technological development that's taking place across the industry. So let's do one more question. This is for Angelo. From a technology perspective, what do you feel is the biggest obstacle towards getting to level 5 fully autonomous vehicles?
Well, I think as far as level 5 is concerned, I mean, the biggest obstacle thus far has been kind of, and there's a number, we can look at it both from the eye side of things as well as the brain side of things. I mean, on the eye side of things, I mean, I think kind of executing and being able to kind of see costs come down in terms of LiDAR and, having kind of, supply chain actually kind of get that fully executed on and, embedded within these vehicles, I think would be a huge opportunity and kind of help you get there a lot quicker. But it doesn't seem like there's been enough progress on the LiDAR side of things. And I think the other big issue, clearly is we're just going to need, time and more kind of we just need patience in terms of kind of making sure that these these processors do the necessary back testing and work needed to kind of get kind of the proper systems kind of up to speed here. It's not something that when we kind of look at the capabilities that have been done on the data center side of things, that took years and years to execute in terms of machine learning capabilities. And I think you just need a lot of time here from these manufacturers to kind of execute on the strategies. So I think you just need it's just going to take years for this to finally come to fruition. But I'll tell you this, it's a very tall task, and many people are doubting whether or not we'll ever get there. I do think we do eventually get there, but it's just, I think we're looking more 7 to 10 years out than we are 2 to 5 years out.
Okay, great. And then finally, I just wanted to show this final slide with the list of upcoming CFRA webinars. We actually have a different webinar coming up each of the next 3 weeks, and we hope you can join us for those as well. And the links to both the webinar schedule and Market Scope Advisor are shown at the bottom of this slide. Thank you very much for joining us today and for your continued support of CFRA. Have a good day. Thanks, everyone.